It wasn't working for me. So how's this? I guess I'll just we'll just do it by phone.
Well, it can work for me. I can certainly try one more time on the Skype, but the video, I don't know, the video is not working on my side.
Ah,
we
okay.
can,
Yeah, I guess it won't matter then if we can't get the video. I think
yeah,
we'll
it's
just,
okay.
why don't we just
It's
stick with
perfectly fine.
Yeah, we'll just stick with this then. First of all, am I calling you at your house or are you still at the office?
Yes, you are.
Okay.
No.
All right. Well, my apologies to whoever I had to bother earlier. I know it's pretty late there right now. It's what, 11:30?
It is right now about 11:35.
All right. Well, thank you so much for joining us. Normally at this time I turn the computer around so you can see the crowd, but why don't we just have everyone say hi to Chris so we can kind of get a sense of the room.
Hi, Chris.
Did you hear that?
Well, it sounds like I did. It sounds like you got a pretty good crowd over there.
Well, they're very excited to.
How many are in the room?
It's like thousands. No, I'd say more like it's about 20 right now.
And so what time is it there in Korea where you guys are, Dan?
It's 1:30 and we're in your future. So ask us anything about tomorrow. We'll let you know what's going to happen.
It's already Saturday where you're at, huh?
Yeah, 1:30 Saturday.
That's very good. I've done this with investors in Australia before, but I've never gotten on a Skype or done a conference call like this with investors from Korea. So it's a first for me.
Well, that's great. You're breaking new ground. You're now in Asia.
There you go.
Well, we appreciate you taking the time and joining us today. We're all really excited. I already did a quick intro about you and what your company does. So, why don't we just start off and, if you don't mind, maybe you could just tell us a little bit about how you got started in real estate investing. I'm sure it's a question you've gotten 1,000 times before, but.
Well, no, it's fine. It was not by design; it was by accident. And the first time that I did I guess we'll call it an investing transaction. It was just a creative real estate transaction. It was where I had a house to sell. It was my personal residence, and I've been trying to sell it for quite some time. It was a kind of a unique property, and I had a buyer come in and say that he wanted to purchase my property, but he had a property of his own to sell. His was a small house, a small single-family home near a university, and he had been having a little bit of trouble selling his because it was mostly college students that wanted to buy it, but they couldn't qualify.
Right.
So what I did was I bought his house to make it where he would qualify for the loan to buy my house.
Wow.
And so once I bought his house, I turned around and I rented it to college students, and that was my first investment property. That's the first one I ever bought. I bought someone else's house to enable them to buy mine, and I was off and running.
That almost sounds like a reality show, House Exchange or something. That's
Yeah.
great. That's great. Now, were you guys weren't in the same area, if I remember, right? Weren't you, or were you in the same state, or how was that working out?
Well, I had moved to Colorado.
Right.
So I had my house back in Tennessee, and I had moved to Colorado at the time and was having trouble selling my house back in Tennessee. So,
okay.
Yeah, I had to do all of this long distance from Colorado, trying to get all this handled back in Tennessee at the same time. So it was definitely interesting.
Wow. Well, that's very creative, the way that you guys were able to solve each other's problems that way.
It was one of those things that it was interesting because it got me. It got me into the real estate game at a time when I knew nothing about it. I was not a real estate investor. Was not even thinking about investing in real estate. I had another business entirely, so it was just it's kind of a freak happening that got me into it, and then that, of course, got my blood going for how can I do more of this creative real estate. So.
Right. How did that turn out? I mean, often you hear about those horror stories when someone gets their first property and they didn't have a whole bunch of experience, and then they start renting it out. Did that turn out all right for you, though?
No. I learned a lot from it. I learned that you don't let friends manage property for you.
Okay.
I learned that you don't. I learned that I'm not real good at dealing with tenants because you have to collect a deposit, which I didn't do. You have to. You can't let people pay late. You can't let people, give you an excuse as to why they can't make the rent this month. I mean, you just can't do those things because people take advantage of you. But I did all that.
Right.
I definitely learned that I'm a better passive investor than I am an active investor, if that makes sense.
Yeah. Okay.
I know what I do well and what I don't do well. So even today, I find property and I buy it, and I oversee the renovation. But once that's done, I get out of the way. I'll let the real experts come in and do the management of it.
Oh, okay. So do you purchase your turnkeys yourself then?
Well, no. I purchase my own properties that I do for my portfolio myself.
Oh, okay.
Yeah, our company today, no, we're as big as we are today. We have I have a team of people to do that for us.
Oh, right. That makes a lot of sense. Yeah, why don't you, that's a good transition. Why don't you tell us a little bit about the company that you help run, that you're a partner of, and what's going on with that?
Yeah, so you know that we're a family-owned company, right?
Yeah. I heard the stapler story, and I thought that was awesome.
Yeah. Well, so we are my father, my brothers, myself. We have 63 full-time employees now in 3 different cities. Right. Memphis, Dallas, and Houston. And for everybody on the call, we were in the grocery industry. Is what I was raised in. I was raised in the grocery industry back at a time when someone would go to the grocery store and there was a you would check out and there was somebody there to pack your bags for you, and then they'd walk your bags out to your car and they put them in your car, and then they took the carts back inside the store, and the store was always clean. Everybody knew your name. That's the industry I was raised around, and so what we did is we tried to build every business we've ever done has always been predicated on this really high-level customer experience and then creating repeat clients. Right. So we try to do the same in this. What we do is it's kind of interesting how this doesn't bother us. I think this is a good thing. But there's a lot of companies out there today that kind of use our model, which is this, we called it reverse wholesaling at the time, that rather than go out and buy a bunch of houses and try and sell them to investors, we had investors that we interview and find out what investors are looking for, and then we go buy property that match what they need.
Oh, okay.
And so it's become almost like shopping for investors that want to be passive rather than. So it's very unique, Right. And it doesn't work for every investor. It's interesting. A lot of investors. They want to see properties first, and they want to be able to look through a whole list of things and then pick off what they want. Right. But that doesn't work for us either, because an investor we'll just use from South Korea. They're not sure. They have no idea really what's going on in Memphis or what's a good neighborhood or a bad neighborhood. It's the same thing for Dallas and Houston. Right. Except for those rare occasions where someone's been there, they're familiar, and so our style is very different. Our style is very. We've got, as I said, 63 employees, so we've got our company really compartmentalized. We do about 65 deals a month. Right. Where, we're doing interviews with clients. We go out and we buy properties based on what our investors are looking for. Right. I will say that we kind of direct clients on where to go. So if somebody comes in and says they're looking for something that we don't have, or that we would that we wouldn't invest in or we wouldn't manage, right, and we kind of put them back on track and direct them into what we do, where we suggest they buy property. If they still want to go with the route that they want to go, then we kind of point them in the right direction with another company. Right.
That makes sense. So it sounds like the typical turnkey model is where a company goes out, finds properties, rehabs them, and then finds the property, buys the property, rehabs them, and then sells them to investors. Whereas what you guys are doing is you're talking to investors first, finding out what they want, and then going out and trying to find that type of property. And at the same time, you're kind of guiding them based on your local market expertise. Is that pretty much?
You got it.
All right. Okay, great. So it's almost like instead of it's being able to make the sandwich the way you want it instead of buying what's already been wrapped up.
That is correct. and we started that back in 2007.
Oh, okay.
So, I mean, we started the company 12 years ago, but really about 7-8 years ago was when we decided to kind of change our model and go to this shopping model, you know, where rather than, as you said, rather than just trying to buy a bunch of stuff that people and then sell, we said, let's not sell, let's just go shopping.
Okay.
You know.
Well, that's interesting. So, what was it in the market that you saw? I don't know, this might just be more of a business-related question, but as an entrepreneur, I'm always curious about this.
Yeah.
But what was it in the market that you saw that kind of made you decide to pivot, as they say, in that way, and move from purchasing the houses ahead of time to more customized purchases?
Well, it went back to our grocery days.
Yeah.
Where this customer service thing. So what a shopper used to come into our grocery stores, my family's grocery stores, and say that, you know, I want this particular product. This is the brand I really like, or something that I really like, and we would go to the wholesale company and buy it and put it on the shelf.
Okay.
And once you've done that, you now have a customer for life. I mean, that customer is always going to shop at your grocery store, and we just said that's the same model. I mean, once you have earned the trust of a client and gone out and found exactly what they're looking for, they have no reason to go elsewhere. And so that was really our thought process.
I guess from a sales perspective too, it changes the dynamic because you're no longer trying to sell a product to them. You're just trying to find the product that they want. So that seems like another positive thing in terms of not having to sell so hard, I guess.
Well, you know what we sell, and we say this all the time. I say this all the time whenever I travel and give talks, is that you're not selling a house anymore. Now you're selling a company.
Right. Selling the service that you guys provide. Well, that's great. I guess along the lines of turnkeys, I'm sure you've had your share of interactions with them. It sounds like a lot of them are sort of copying your model. What do you think in terms of investors? We have a lot of investors here in Korea who don't have the resources to go and look at properties on the ground. So they might be very interested in turnkey investments. In fact, I think we have at least 3 or 4 people who have already purchased turnkeys or have thought about purchasing turnkeys. What advice do you have for them in terms of like what to be looking for in terms for when they're vetting turnkey operators and what they should sort of be wary of?
Yeah, well, I give a lot of high marks to turnkey companies that have been in business for a while and that have, they're owned by first investors, people that are actually investing themselves, but also they have business acumen. You know, they're entrepreneurs. They've been around business for a while because they will know the systems. They will know the processes. They will know the pain points of investors, and so they'll know how to be able to address issues that are going to come up for an investor, especially one from so far away.
Right.
I say be wary. The thing that I'm always wary of, or I tell investors to be wary of, is anyone that tells you that they've got it all covered, everything is going to be great.
Yeah.
Anyone that says, certainly anyone that says, I'm not a big fan of guarantees. I know that they're out there, and I don't talk negative about any other companies that offer guarantees. But I tell an investor to be very careful that you don't purchase the guarantee.
Okay.
And I'll give you an example. Companies that guarantee no maintenance in the first year, or they guarantee that you'll have no vacancies during the first year.
Yeah.
I often tell an investor that if a property is renovated good and properly, and if you have a really good management company, you shouldn't deal with those two things anyway.
Right.
So what's the guarantee? The guarantee is nothing more than a sales pitch. It's nothing more than a word that's used to attract an investor and make somebody feel a higher level of comfort.
Right.
And that's dangerous. Right. It doesn't mean it's bad. It just means it's dangerous. There have been many companies out there that have hurt investors by doing that. They sell the guarantee and then they don't do very good work on purpose. That's because they're not selling the property; they're just selling this guarantee. And so, and after the first year, it just is what it is. You tell the investor, hey, it's your property. It did what it said it was supposed to. It did what I said. The first year was great. Now it's yours. And not everybody does that, but those are just some of the things I tell investors is don't purchase a guarantee. Mm-hmm. And the other thing too is the house is really secondary.
Yeah.
And as odd as that sounds, it really is. The house is just four walls. It's meant with a good company in a good location that's really looking after your good interest. Right. It's going to perform. You're going to have ups and downs, but it's going to perform. So you're really looking at who is this company. Who are these people? How do they protect me? How long have they been in business? How smart are they? Are they good, smart company? And then, because it's a financial investment. It's not you're just using real estate as a vehicle, but really it's all about financial investment. Is this a good, smart company that's going to take care of me?
Right. Great. Well, that's really great advice. I think I've heard other people mention that too about the house being secondary, and you really have to make sure you're getting involved with the right company, since it is like a business in a sense that if the people managing it don't know how to run the business, no matter what the business is, you're not going to get a great return in the end.
No, and that's good. I'm glad to hear more people are talking that way, because 7-8 years ago that wasn't the case. 7-8 years ago it was all about cheap property. Right. And these sky-high returns that were there was no way they were achievable, but they looked great on paper. Right. And that's why turnkey, it does have a bad reputation. Right. Because that's the way it started. Right. So it's really good to hear companies talking that way, because that's the way it should be.
That's great. What are some of the great questions you've received as a turnkey operator? Or do you remember any offhand, or some of the questions that really that you feel like, okay, this investor seems like they're asking the right type of questions?
Well, when an investor when they ask questions about, like, I'll give you an example for the whole process. When they ask about deferred maintenance, that's an investor that understands that it's real easy to make numbers look good on paper by lowering the barrier of entry, lower the price, spend less money on the front end to make it easier for the investor to buy. Yeah. The old lipstick on a pig analogy. And so when an investor comes in and wants to know about deferred maintenance, I love that, because that means that they're aware that they don't want deferred maintenance, and that they know that there's going to be costs going forward. Right. When an investor asks about the management side, so property management is so important, especially for investors like your group, so far away. Management means everything. Right. And so when an investor asks questions such as, and I think this is a great one, what percentage of collected rent goes to maintenance in a year? Okay. So a good management company knows that number, because that is key for an investor. Right. When that number exceeds 5, begins to get towards double digits, you're not making money. Okay. And so you need to, and if a management company can't give you the exact number, then they're not doing a very good job of tracking. Okay. So I love it when I get asked like very specific questions like that. But I will tell you, there's one question that is the best question I've ever been asked, and I encourage investors to ask this particular question in all my writings and podcasts or whatever, in my talks. Is that I tell investors they should ask the company or the owner or whoever they're talking to, what's the biggest mistake they've made as an investor? All right. And how do you protect me from making that same mistake? And that's telling, because
Right.
that's, if somebody tells you they haven't made any mistakes, well, then you probably aren't dealing with the right people. And if they give you a mistake like, well, I set my rent too low one time on a property, that's horrible. That's not, that's not even a mistake. You want to know that somebody can get real with you and get, and open and be honest.
Right,
and when they do, then okay, now I'm dealing with the right person.
Well, you just set yourself up for the next question, right?
Well, yeah.
All right, Chris, let's hear it. We're intelligent investors. We want to impress you. Let us know, as an investor, what do you think is the biggest mistake you've made, and how are you going to protect us from that?
Well, in mine, right after I bought that first house,
right.
I owned a company. I was in the grocery industry, as I said earlier, and I was making a lot of money. Doing very well. And, I sat down and I set out a plan for myself, and my plan was I wanted to own 10 properties.
Okay.
And I wanted to own them free and clear.
Right.
And so I bought each property. I remember specifically telling my wife that the first property I bought was for our son. It was his college education.
Okay.
We put it on a 15-year note.
Right.
He was 3 years old at the time.
Yeah.
So we'd have it paid off when he was 18.
Nice. Very
so
nice.
10 properties. Okay, 10 properties. That was my plan. My biggest mistake I ever made was I got greedy.
Oh.
I thought I was a much better investor than I was. Before I knew it, I looked up.
Yeah.
I remember a transaction. I bought 10 houses in one day.
Whoa.
From Washington Mutual. They financed.
Yeah.
Get these terms. They financed 95% of the purchase price.
Wow.
All I had to do was put 5% down plus closing costs. And I closed on 10 properties in one day.
Wow.
And before I knew it, I looked up and I had 54 houses.
Oh, wow.
Okay?
And
remember, my plan was 10.
Right.
So I had all the insurance, all the taxes, all the paperwork. I was inundated, and I couldn't keep up with it. I was not happy. My business began to fail because I was putting too much attention towards the real estate that I owned.
Right.
And so my biggest mistake was I had a plan and I didn't follow it.
Right.
And I had no one there to guide me and help me.
Right.
And so when I talk to investors today, that's the very first thing I do. And I don't get to talk to as many investors as I used to.
Right.
Because now that I'm running the company, so we have teams that work with all our investors, but I train them all the exact same way, that it's develop a plan.
Right.
What is your plan as an investor? And then what we do is, you have to keep yourself in check, but if an investor's plan called for them to buy 5 or 10 or how many properties it is, and maybe to get beyond that, we stop them.
Right.
Hey, let's readdress this. Where are you at with your income? Where are you at with your with your long-term plan? Why do you want to buy more property than what your original plan called for? And slow down. Don't make the same mistake. And so I tell people all the time, it cost me big time. Just to be very, very clear and blunt, I lost a lot of money as an investor.
Oh, okay.
And I, my business, as I just told you a second ago, my grocery business, which I was excellent at, I had a very, very good business. It failed.
Wow.
And it failed because of my inability to be patient, my inability to not be greedy, my inability to follow a plan. I wasn't even looking at the houses I was buying. Those 10 houses I bought, they weren't turnkey, but I didn't pay attention. I didn't even go look at them. I looked at the pro formas and I said, these are all great. I trusted the people I was buying from. And I lost. I lost big time. And so, it hasn't always been a great road for me as an investor. But it hasn't. I did those things on my own, for myself. But my point is that I learned. And I learned that when I'm dealing with other investors and they're relying on us as a company, This is not. This is where the whole non-sales thing came from. I don't want to sell anybody anything.
Right.
If I have to sell, then we're doing something wrong. This should always be, you've given us your plan, you told us what you're looking for, we are providing opportunity based on what you want.
Right.
And so
that's great.
Yeah.
That's great advice too. And yeah, just listening to it, it's almost like, it sounds like your company is almost helping with financial planning. It's pretty cool that you guys are going that deep with people.
Well, and we have to be very careful because everybody on our team is licensed real estate agents, but no one, we don't have any Series 9 or anything like that.
Yeah.
But yes, you are correct.
Yeah.
The whole purpose is to slow down almost, and not get someone to buy, but the purpose is to slow down and, hey, what are you doing this for? Because almost all of our investors invest from a long distance. Very few are near. Especially now that we've got the 3 cities.
Right.
So it's slow down. What are you doing? Why do you want to buy property? Know your reasoning, and let's see if we are a good fit.
Right.
And it's worked really well. It's been almost 17 straight months now that 60+% of the homes that we close each month are sold to a pre-existing investor.
Oh, nice. Okay.
So one of our own clients buys 60% of all the houses we sell each month. So it's that points back to that whole have a plan and know what we're doing and why we're doing this kind of thing.
Right. Well, that's a great ratio. I know we're heading up on your Saturday. It's about midnight there. Do you have time for a few more questions from the audience?
I feel great.
Okay,
yes,
great.
Please.
Okay, great. Yeah, I'm just going to open it up right now. I think people are sick and tired of hearing my voice, so I'm going to go ahead and open it up and see if anyone else out there has questions. I know a lot of people out there are thinking about turnkey. So, anyone have a question for Chris? Oh yeah. Okay, Robert.
Hey Chris, it's Robert Medlock. First, I want to say congratulations on your success. I listened to your podcast 122. I do a lot of traveling, so I got a chance to listen to it.
Just real quick.
Thank you.
Can you hear that, Chris, or should I repeat it?
I did hear him, yes, and I got a little at the end. I couldn't hear very well, but yeah, I did hear Robert Matlock, I believe was the name.
Robert Medlock. He's
Medlock.
Yeah, he said congratulations, and he was listening to your podcast 122. He's got 2 questions for you.
First question is, we've got a couple people in our group that invest in Memphis, and they do the turnkeys. I was looking at the opportunity, and I was just wanting to know, I guess this goes back to the earlier discussions, how do you get a warm and fuzzy from so far away? What are the things that we should be looking or asking for that we can get from you as the shopper, if you will, that will let us know this is going to be a great investment for me to buy from here? I do a lot of work on my own property, so I'm a hands-on kind of guy, and it's just hard for me sometimes to just believe what someone tells me or what they show me in numbers. How do you get a warm and fuzzy?
Well, let me start by saying this, that you have to know yourself as an investor, and so the first thing I would do is ask you, is this passive investment really one that you want to make? And I say that because I had an investor out of New York who he wanted to buy with us. He met me in New York when I was speaking up there, and he was excited and ready to go. Mm-hmm. And through my discussions with him, he told me about all the properties he did up in New Jersey and in New York, and he talked about the renovations that he oversaw, and he talked about going and he didn't get a big kick out of going and collecting rent, but it didn't bother him, and he would go and collect it on Saturday mornings or whatever. And I told him that, I've been around enough investors. I just said, are you sure that this is what you want to do? Are you sure that you can do this? Because not everyone is built to be able to be passive. Not everyone is built to be able to really turn their dollars and their investments over to someone else. So, really, the first warm and fuzzy that I think you would need to get from somebody is, when I tell them I'm interested, do they just immediately launch into, hey, well, let me tell you about these great properties we have? Or do they try and get to know who you are? Because, you may not necessarily want to hear it, but in the end, they may save you a lot of time and a lot of aggravation by saying, don't buy, wait, do things closer, do things more active, or let's spend more time getting to know one another before you really dive in, because for an investor that's used to being hands-on, going passive is really difficult. Trusting that someone is going to do things to your level of expectation is hard. And so, that's one of those things that's trust that is earned over time. That's difficult to get, right off the bat over the phone. And so, with us, one of the ways we try and earn trust is by showing that we are, we lean on our business background.
Right.
We track everything. We have stats, on everything. I'm not kidding. We track every metric that's out there, and we have a set number of KPIs that we, that are super important to our company. But more than anything, with an investor, we try and just earn their trust by having the right data. Be able to go through, how do I know that my rents are correct? Well, we have data going back to 2009 that shows how often we hit our rent number.
Right.
And how many of those properties, even 5 years, now 6 years later, are still rented at or above the number we told an investor to rent at 6 years ago.
The KPIs, I'm sorry, Chris, KPIs real quick, that stands for Key Performance Indicators?
Yes, sir, sorry.
Okay.
I apologize. Yes, Key Performance Indicator. There's just these key numbers and these things that not every business person knows to track, not everybody knows to be able to keep a close eye on. And for us, that's how we earn trust from an investor, because we know. We have the data. And so there's nothing wrong with being fearful or mistrusting. You have to be that way from so far away.
Yeah.
But you also have to be able to be honest with yourself and say, hey, am I really cut out to be a passive investor? Am I really going to be able to turn everything over to somebody else and trust? Or am I going to, or will I make this investment but then stay awake at night, or even worse, just not believe them when they tell me something?
Right.
Or, when something bad happens, it goes vacant. And let me tell everyone on the phone here that we are not perfect. We have, unfortunately, a list that we go over every single day, as leaders, but also every Wednesday in our rental meeting, of properties that have been vacant for longer than 30 days, longer than 60 days.
Right.
We have a longer than 90-day column on there, because sometimes properties are vacant longer than 90 days.
Right.
And there's no rhyme or reason. They're not priced wrong. They look great. It's just investors or renters choosing a different property. And you have to ask yourself as an investor, how am I going to feel if the property goes to 90 days? Am I still going to think they're doing everything for me, or am I going to start thinking that they're cheating me somehow?
Right.
And if you feel that way, if you can answer that question like, well, I think I'd be pretty mad. I think that I couldn't trust what they're telling me. Then I would say you're not ready to buy with that company yet.
That makes sense.
That was a long answer, Robert.
That was a good answer. That was an honest answer.
Yeah, but that's what I was looking for. I think when you were having the conversation with Brandon and Josh, that's one of the things that I think Brandon pointed out. Jump on the plane and come and meet you, handshake, and do it face to face. Again, unfortunately, we're so far away. Every time we get on the plane and go somewhere, we got to deal with murder. We got to deal with, it's just everything. It's so long. It's almost sometimes a 20-hour trip just to get home without a layovers. So it's not as easy as just saying, well, I'm coming from Washington to Memphis, or I'm coming from Florida to Memphis. It's a little more for us here to try to do it. And I do have properties now, and I'm in the same position as you're saying. I have to trust them so far away. And so when you do go home, a lot of times you spend the amount of your vacation, or whatever you call it, trying to get some more business taken care of, and then trying to kind of couple it with a vacation.
Right.
So that's a good answer, though. I'll take it to heart. The second question I have for you is, I know you specifically do single families. Do you have a plan, or is there anything, has anyone ever asked, as far as an investor, whether you would go into a multifamily type of turnkey, maybe duplexes or fourplexes, or is that something you guys should stay away from?
Well, we've done a handful of fourplexes, both in Memphis and in Dallas. But, I will tell you that one of the strengths of a really good company is they recognize what they're good at, and they want to be the best at it. And for us, we recognize that we began to focus and concentrate on single families. It's what we're really, really good at. And we don't have the same expertise in the multifamily markets. As far as duplexes go, in Memphis particularly, we just don't see it as a really strong investment because the rent range for many of them, due to the location, is just too low. And so it attracts a more transient renter. Transient renters, more move-outs, more maintenance costs, more, it just kind of, it doesn't necessarily pencil out as good over time. And the fourplexes, well, that's even worse because the fourplexes are smaller than the duplexes. So now you got 4 renters, but now they're paying even less than what the duplex renters were. So, it's just something that we've dabbled in, but we recognize that we're really, really good with the single families. We're not as good, identifying and managing those bigger ones. So for now, we stay away. But I will also tell you that if you ever, when a investor comes to us that's interested in that, we point them in the right direction. There's a couple of really good companies here in Memphis for an investor that's interested in that particular product that we're able to point them in that direction and let them talk to those companies. There's a couple that we think are good at it. So we share that.
Yeah, when I get back to the States, my focus probably will be in Houston. Probably will make Texas our home. So I'm going to watch your new company, Houston Invest, and just keep in touch and see how things go there. Maybe, just play it by ear. Yeah,
I tell you, I love Dallas. We love Houston. Those are really, really good markets. So.
All right, I'm going to go ahead and see if, does anyone else have a question for, yeah, all right, go ahead. We have a question from Sandy.
I'll get close so he can listen.
Okay. You guys can also stay there and I'll repeat them too. So either way, whichever you feel comfortable.
Hello, Chris. This is Sandy Rodriguez.
Hi.
Hey, I have a question about Memphis and Tennessee in general. I noticed that you expanded into Texas, Dallas, and Houston. And I'm wondering why you did that, because I believe that Nashville has a lot of potential as well.
Well, I love Nashville, and I think you are correct. As far as I know, there are not any, well-established anchored turnkey companies in Nashville. But for us, it was simple. I was born and raised in Dallas. It's where I have met much of my family. Many of our business contacts are there. My family owned grocery stores in Dallas, Texas. We arrived in Memphis because my grandfather was a entrepreneur here in Memphis, so that's how we got to Memphis back in the mid-'80s. But we went to Dallas because we knew the market really well, just as well as we knew Memphis. And so we felt if we were going to give investors advice and be able to help them navigate a market, we needed to know it really good. That's why we went to Dallas. Houston is a market where many of our team members, or in fact several of our team members, had grown up and lived, and so we spent about a year studying the market before we went there. Nashville is a natural place for us to go to next. I want to do it. I will tell you that my father, who's right now our CEO, he does not want to go to Nashville yet, and I have to admire him for the reasoning. If we went to Nashville, we'd sell a lot of houses. But he doesn't want to go to Nashville until we have Dallas and Houston buttoned up perfect the way we have Memphis. And he says, it makes no sense to do a bunch of things halfway. It doesn't make any sense for us to be in a bunch of cities but only do them half as good as we could. So we're going to be great in Dallas and Houston, and then we are going to be looking to go to Nashville. For our company, the way we do things, when we get there, there will be a market. We'll create one. So but I'm not sure when it'll be.
Okay. Very
but nice. I love your idea. I love Nashville.
All right. We have another question here from Jacob.
Hey, Chris. This is Jacob Michaels.
Yes.
I'm actually a wholesaler based here in Korea, but I do it virtually in the Dallas market. What I'm wondering is, and I talked with one of your guys, Ryan Flannery, I think was one of your guys. He does some buying for you. Is that right?
That's right. That is correct.
Yeah. You mentioned just now that you want to wait to move into Nashville until you get Dallas and Houston tied up. Where are you lacking in Dallas, do you think?
Well, we're lacking in number one, building out our team. So we're slowly building our team. We're in need of some really high quality project managers. We're in need of a couple more high quality rental agents. We could probably purchase and sell 40 houses a month in the Dallas market. But we don't have the team in place to be able to do it. And we don't just hire anybody. Nor do we go through a lot of people. So we're pretty selective when we hire. We're just looking for high quality people there. And when we find them and they meet our team, we bring them in. And that's really what we're waiting on over there is just, we haven't even hit what we're able to do in Dallas yet. Mm-hmm. We know that we could do, like I said, up to 40 houses a month. We just need to get the team in place to do it. I expect that'll happen over the next 12 months. And then, of course, by that time they're trained and, everything's moving the way you expect it to move. So that's what I mean by that.
Okay. So I've actually got a couple different questions related to that.
Yeah.
How many houses are you buying right now in Dallas? And where are you buying?
We're averaging, we'll buy anywhere from 4 to 7 a week right now. And so, we're about 25 a month is what we're averaging buying once the month is totaled up. A lot of it is on the 401 side, so the west side of the Metroplex there. We're buying Garland. We're just now starting to get up into some of the parts of Plano. We've stayed away from it because of price points. We're trying to stay in a lower price point. But we're doing all over Tarrant County. We're doing a lot in the Tarrant County area.
And what kind of price range on the low end? Because a lot of the inventory that I get, I do a lot of marketing, direct mail marketing. That's how I get people to call.
Sure.
A lot of the properties that I get are actually really low-end properties, and I don't think it really fits your business model so much because it's kind of the areas are not so nice for buy and hold. Do you do any buying in that kind of range? I'm talking like less than 50,000 kind of range. No,
not really.
Yeah.
And most of what you're probably getting is probably 3-bedroom, 1 bath, maybe 2 ones, maybe 3 1.5s. Am I right?
Yeah, exactly.
So we're trying, with Dallas, we really have decided we want to try and buy as much, 2-bathroom are the minimums. So we're getting a lot of 3-2s, a lot of 4-2s. We're ending up picking up properties in the 70s to the 90s. And we've even pushed into the low 100s now. And these are properties that once we renovate and put our margin on top of it, we're in the 110s to 150s on the sale prices. So.
Okay. And so last question for you, and this kind of can give you opportunity to kind of talk about your business model a little bit more in detail for people. Can you walk us through both on the purchase side, when you purchase properties, what you do to it, what kind of price range you sell at, and what kind of returns the end investor would expect to get?
Sure. So we buy from gentlemen like yourself, ladies like yourself, companies like yourself, and we also buy through auctions. We buy through real estate agents directly off the MLS. We will purchase properties. We look at everything on the front end, evaluate what we think it's going to cost. Our average renovation in Dallas is $27,000. We're replacing around 70% of the roofs. These are going to be round numbers. I don't have it directly in front of me, but I, of course, go through the stats each week. So it's about 70% of the roofs get replaced. Roughly 60% of the air conditioners we replace, around 50% of the water heaters, and then back around 70% of the furnaces get replaced in every property that we do. Mm-hmm. We try and limit deferred maintenance as much as possible. In Dallas, we end up touching a lot of foundations. So we end up having the foundation teams come in, and they end up putting the pylons underneath the houses to hold them in place or put them, shore them up. So our price over there in Dallas for the renovation ends up being, as I said, on average around $27,000. The way that we work is that we buy everything with our own money. We renovate everything with our own money. An investor can put a property under contract with us at any time, but they cannot close the property and take possession until after we've completed the renovation. That way they take possession of a completed product. Around 60% of the time, that property already has a tenant in place in the property, and about 80% of the time, there's either a tenant in place or a deposit with a rental contract set to close. The average return there in Dallas is anywhere from, I'd say, 8.1 up to about 8.7, 8.8. Very few of them reach into the 9s. And a couple will be in the high 7s, depending on the price points. So that's our I don't want to use a cliche like the bread and butter, but the properties that we're doing in Dallas are going to sell between 110 and 150. The reason why investors buy with us is not so much the high return, but the consistent return. We are able to get 2-year leases in Dallas, which I know very few companies are doing. But I think it's more because they're not asking for it. And most don't ask for it because they want to raise rent at a higher rate because rent are going up.
Right.
But we do 2-year leases, offering a high level of stability to the investor and to the tenant themselves. And so investors buy with us because when we say it's going to earn a return in the let's just say 8%, it's going to earn that return. Because of the level to which we renovate it and the care to which we take and where we buy and how we rent it and how we vet the tenant. I mean, it's going to perform the way we say it's going to perform. So.
Right.
Okay, sorry, just to clarify, I don't know if you touched on this. So the end buyer are they taking out a conventional loan, a conventional mortgage against the property? And they're going to basically close you guys out of all of your investment up to that point?
They can because the work is done when they buy it. So they can qualify for a conventional loan. Not everyone does. Some, of course, they use IRA. Some will use a non-recourse loan in their IRA. Others will just pay cash. But you are correct in that all of our properties qualify for a conventional mortgage if they choose to use it because we won't sell it until all the work is completed.
Okay, and then they pay you just property management fee on top of that. Is that right?
That is right. Our property management fee is 10% a month, and we collect 1 month's rent as a lease-up fee. 50% of that goes to the agent that brings the client in, the tenant in. And our average length of stay in Dallas is right at 2 years. Average length of stay in Memphis is a little under 4 years.
Wow. That's great.
That's consistency.
Okay, all right. Thanks, Chris. Good talking to you.
Yeah, you're welcome.
All right. Wow, Chris, you hanging in there? It's it's 12:30.
Hey, look,
I know it's getting late, man.
No, I'm good.
All right.
I told you I would do it, so I'm good. Don't worry about me.
Thank you so do you guys have some more questions for Chris? Oh, okay. We got one over here in the front. My co-organizer Ben Hauser.
Hey, Chris. My name is
Hey.
Ben. Have you ever worked with foreign investors?
Have you worked with foreign investors, non-U.S. citizens? Is that what you mean?
Yeah.
Yeah, foreign investors, non-U.S. citizens.
Yes, we have, but I'll be very direct and tell you that it's not. I don't know if it takes anything special to work with a foreign investor or not. You hear some companies, they say that their specialty is working with foreign investors. With us, we don't have a lot of foreign investors. It's kind of interesting. Our foreign investors are marketed to by other companies, and then when they do their research, they find us and come to do business with us. We don't do any marketing to foreign investors, only because we just do so much marketing stateside. So
Right.
we're not against it at all.
Have there been any particular challenges with working with foreign investors on your end, or on the side of the foreign investors, or
No, it was a business decision. When we researched the market, and a couple of things with us. We didn't need promoters. Many foreign investors are brought to the United States market by promoters who, they promote whatever. They travel around the world, whatever, and they promote property, and they bring them in for a fee.
Right.
We never needed that, so we've never worked with any promoters, which is probably the biggest reason why we don't have a lot of foreign investors. We've never worked with promoters.
Right.
The second reason is that when we researched it, we saw that foreign investment only made up 7% of the U.S. investment market. And at that, 33% of the foreign investors were Canadians. This was back 2010, 2011. And we just said, it just doesn't make sense for us to spend dollars on 7% of the market when we can spend more dollars on 93% of the market and generate our own leads. So that's, those two decisions were really, they were just business focused. It wasn't anything that we didn't want to. It was just, it made more sense to focus time and energy stateside.
Right. Ben, did you have a follow-up with that? Or?
I'll just ask because some of our members are Korean or from other parts around the world, and I know they're kind of interested in potentially investing in the U.S. And so I thought maybe you had a model or something.
Yeah, we have. I will tell you that we've had zero issue working with foreign national investors when it's when we do. We even have from the financial side of having funding, and from the legal side, I've been able to help them get whatever legal advice they need stateside. We have that in place. So we do have investors in Hong Kong. We have investors in Singapore, Spain, Australia, New Zealand. We have investors from each of these locations, but it's just not a lot of them. So we don't have an office set up just for foreign investors, nothing like that.
Yeah.
But we certainly, it's not anything.
Hello?
Never.
Oh.
Yeah, can you hear me?
Okay, yeah. I think you cut out a little bit there, but you're back now. Okay, do you guys have any other questions? Anyone else have a question that you guys want to ask, Chris? Okay, I think we'll let you go then, Chris. Thank you so much for spending the last hour with us and staying up late and just giving us so much great information. I have a question. Do you mind? I recorded this phone call. Do you mind if I put this up on YouTube and sort of give a chance for the people who couldn't make it to listen to it?